Hey guys, what's up? Welcome to this video. It's your boy Sammy. In today's video, I'm going to show you how to do multiple time frame alignment that helps me in my trading analysis. Now, you need to take something home, and that thing is whenever it comes to time frame alignment, it has to do with the kind of trader they are. In the first market, we have day traders, we have scale paths, we have swing traders, and we have position traders. Position traders are traders that open their position for over a year or quarterly in the year, or however it goes, maybe 2 years, or kind of depending on the kind of what trader that they are. And we have day traders that open their position for the day, they close all their positions for that day. We have swing traders that open for a minimum of 3 days and maximum of 4 weeks and all of that. Then we have scale paths that open for minutes. Now the kind of trader that you are will determine the kind of what time frame alignments you're going to be doing. Now for the sake of this video, I'm going to be explaining how day traders do their own time frame alignment. First of all, there's one thing similar about all the traders. We do our analysis from the higher time frame, which is the monthly, and from there we work it down to the lower time frame. Now for the sake of this video, I'm going to be using the monthly here. As you can see, the market is bullish. How do we know? This is a higher high, higher low, higher high, higher low, and all of that. Then all of a sudden we got something. This was the highest point and the market broke below it. Now somebody may be saying, guy, how do we say this market is not bearish? Don't forget, before we say a market is bearish, the market should be giving us a lower high, lower low, lower high, lower low, and lower high, just like that, and lower low, just like that. Now we cannot say this market is bearish if the market has not been giving us this stuff, break of structure and the rest of them. So we're going to be saying this market is still bullish. How do we know? This was just to what this trend line here was what I drew. The price respected it and start going back to the upside, and has been respecting this swing, this trend line here. So this is what we are expecting price to do, come back here in the future and start going back to the upside. Now somebody may be saying, how do we know this market is still bullish? Now it's already clear. What do we do now that we know the market is bullish? All we have to do is go down to the lower time frame. I'm going to be skipping the weekly because of the sake of this, the day trading analysis, and we're going to be checking what the daily is saying. Okay, now take note, for the daily it means to take 1 day for the candle to be formed. So all we need to do is check what the daily time frame is doing, and from there we can pick up analysis and see how far we can go from there. So this is the daily time frame. As you can see, it actually is the same thing as what the monthly is saying. Please, the best way to stay profitable is when you move with the trend. And like I said, I'm a trend trader, so I always stay with the trend. And whatever the trend is doing is what I want to also do, so I can get my own profitability from that zone there. So this market has been bullish here, but there is a video I explained something that whenever a market breaks a mini trend line, it comes to the big and the major trend line. I think I explained something like that in the previous video. So we're expecting this market to respect the big trend line in the monthly, but whereas we don't have to wait till it happens, we can actually trade above that, because this market has been respecting this trend line in the daily time frame, has been respecting these trend lines before we got a break here. Okay, so what do we do now? Now that we know that this time frame is in alignment in the daily, we go down to the 4 hours. From the 4 hours, this traders they see the trade from 4 hours. Why scale paths like to use 1 hour to scale, but day traders they use the 4 hours because the 4 hours give them the clear picture. This video we are doing is recording from all USD. Okay, so this is it. So now how do we know? As you can see, this is still the big trend line that is drawn from the monthly. So this is the big trend line here, and this is the one that the daily has been respecting. So what do we do now? What we equally do here, it's simple. Since we know the market is actually bullish from the daily, which is the inner trend line. Sorry, this thing is taking time to load. Okay. Since it's the inner trend line, so what we do is we go down to the 4 hours, like we say, and look for a position to take off that trade from. all you have to do is position your trade here. As the market came to the trend line, go down to the 30 minutes and you will see a trend reversal, which has to be your double bottom, and you take your trade off to the upside. And whenever you get another trend line that is here, which is the 4 hours, you see that the market breaks the trend line, then you can leave the trade, because it is coming to respect the trend line again before going back up. But in this case, it was broken, which shows that the market is possibly going to reverse. But there was a question that was asked sometime: you wait for the market to break the trend line in the 30 minutes. Okay, I think I'm going to be explaining that in the how to do multiple time frame analysis in the swing trading strategy. But this is just for day trading. In case you have a question, leave a comment in the section below. Thanks.